What's up, everybody? It's the Digital World Podcast. And we have some news that the Fed raised interest rates another 25 basis points. So it looks like it is now at 5 or just above 5%, the highest it's been since 2007. And I want you to look at these charts, okay? These are the bank failures by year. Obviously, you saw an increase. Number of bank failures were almost around 175 in 2008. Look at where we are in 2023, almost 250 bank failures. Sorry, total assets. Sorry, I was mistaken on that one. So, the total assets in millions is much higher now. Number of bank failures, we haven't even began to touch the surface. And so this is only going to increase. So here it says, a reminder that back in the GFC, over 150 banks went out of business. Today, four failures already equate to nearly the entire amount of assets financial institutions held during the banking crisis issue of '08 and '09. If you're asking yourself whether the Fed will allow the same systemic problem to unfold today, look no further than gold prices starting to sniff around liquidity injections to sustain financial stability. So, something to wrap your head around, but it's not gonna get pretty. And and this is the thing: when they started raising interest rates, you already knew that what was coming, the consequences coming after, were not going to be pretty. Listen to Glenn Beck talk here. 2007, 25 banks had to be bailed out, total of 526 billion over 12 months. In the last 5 weeks, we have 3 years banks fail, and we already have over the 2007 total by 6 billion. Check what he has to say.
In 2007, 25 banks. They had to be bailed out, including Washington Mutual, the single largest bank failure in history. Total of $526 billion, and that was over 12 months. In the last 5 weeks, we have had 3 U.S. banks fail, and we're already over the 2007 total by $6 billion.
All right, move on. Nothing to see here. Please disperse. Nothing to see here.
This is the data from the Federal Reserve.
It's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be.
Only a catastrophe can shake humankind and open the path to a real system of global governance.
I want people to go read Executive Order 14067. Executive Order 14067, signed by Uncle Joe, the 8th of March of 2022, and it went into effect 13 December 2022.
COVID makes it accelerates the process of digitalization and automatization. It legitimizes the deployment of mass surveillance, and it makes surveillance go under your skin.
The nature of this CBDC, what is it actually going to look like? They never talk about that. Right. But I heard one European central banker tell me what it's going to look like. And it was around this large and would be implanted under your skin.
CBDC. If that happens, we're done.
The old systems of trust and of ownership will have to adapt radically.
China's taken over. And China, I heard a couple of people say, well, the dollar will never lose the dollar standard. Are they kidding?
So money is evolving from a very binary thing, which is where it is today, to a very complicated, intelligent form of money, which we call smart money.
First, my name is Cash. I'm constantly worried about inflation. Go to bh-pm.com today so you can go buy gold and silver and secure your family's future.
Okay. So you saw a little bit of all of that jazz there. So there's a lot going on here. Fed has chose to capitulate on cooling inflation or letting the global banking crisis grow to systemic levels. They're choosing the latter. Make no mistake, both of these problems were directly caused by the Fed in the first place First, by flooding the system with money for a decade plus with everything there, and then rugging everyone by rapidly reversing course. To be even more clear, the U.S. sold everyone government bonds when rates were low, told everyone they'd keep rates low, told people they're the safest asset in the world. Fed bought up the bunch to fix rates low, then rugged everyone by shooting rates up once inflation. So anyways, what's been happening is what they're trying to do is to consolidate all these banks. 10 years ago, there was around almost 11,000 banks. Now we're closer to 4,000. So as these banks tend to fail and get bought up by these other mega banks, you see a consolidation that's taking place. And they're monopolizing this, and they're going to control, and with this crisis, you're going to see even more banks fail, and they're going to consolidate, preparing for the ultimate end game. It's going to make the CBDC system that much more easier to implement. Here, it says when the FDIC takes a bank under receivership, it nets decreases U.S. dollar liquidity. We're not at the end stage of the banking crisis where USD liquidity drops as a consequence of it. The risk creating a negative feedback loop. It shows the short-term borrowings as of March 31st. Okay, so it's interesting to see that there. Now, here is the stat I was telling you. 30 years ago, there were 11,000 banks in the U.S. Now there are about 4,000. Every year, the big banks become more powerful while the competition shrinks, all by design. And then here, in reference to the SWIFT, it says 100% by design. The mega banks bought post-2008 regulations, cashed them for concentration, near a ban on new entrants, and the bespoke lifeboats that are now gleefully riding like parachutes. So they're controlling this whole narrative, and they're trying to become larger and own a larger market share. It's a bunch of sharks in that industry. So it's no surprise there. Anyways, so today the Fed raises interest rates, and we have more banking failures. So you got to stay diligent, be ready, because it's only going to get messier. But you take it a day at a time. Thank you for watching. Like and subscribe to the channel. It's the Digital World Podcast, and I'll see you in the next episode.